Hi, and welcome back to our show, Smart and Secure Investing, brought to you by Treasury One Uganda Limited. Well, last week, we were telling you a step-by-step process on how to invest in Treasury Bills and Bonds. This week, we are going to focus on talking about why you should prioritize a low-risk investment over a high-risk investment. First, we're going to talk about what a high-risk investment is. I'm sure you have either been a victim or you know someone who has been a victim of some high-risk investments. For example, forex trading, AIM Global, sports betting. All those are very high-risk investment and quick money schemes. The reason why you should not invest in these quick money schemes is because the chances of you losing your money is very high. Number two, there are more positive testimonials are very pronounced in the advertisement or on social media testimonials, and we don't get to hear about those people who have lost their money. Why? Because actually they don't only lose their money, they also lose. Another reason as to why you shouldn't invest in these quick money schemes or these very high risk investments is because the advertisement is so positive. Because we hear testimonials of people who have been forex trading for a long time, been in AIM Global for a long time, and they are selling to us a vision which is not realistic. Why don't we hear about people who have lost their money? That's because they don't only lose their money, they also lose their mental health. They become depressed. We've heard about students losing their tuition, investing their tuition so that by the end of the semester, maybe they think they will have attained a certain level of profit. They lose their money. Or like boda men who are lured into giving away their only source of income, which is that bike. And before we know it, they lose their bodas. Or even family-oriented people. They sell their pieces of land and mortgage away their houses in order to participate in things like betting, and they lose their homes. So today, we are going to talk about how you can build wealth without breaking your bank and breaking your heart. Just imagine this. You have a goal in mind. Maybe you want to do a very big wedding, or you want to buy a huge piece of land, or you even want to buy a car, or you live in the diaspora and you want to be able to provide for your family continuously, in that even when you're not around, or even when things are bad in the diaspora, maybe you've lost your job, they continuously have their money. Or you are a young couple, you've just got married, and you want to start saving for your children's education. Think about that. And then they tell you that what is that total amount of money you need to, save for that. I'm going to use the example of a young couple that has just got married and they're planning for their children's education. By the way, when we hear about planned kids, this is what they mean. Their parents sat down, thought about how many children they want to have, the schools they want their children to go to, the level of education they want the children to attain, or they're going to push their children to attain, or maybe they say they're going to educate their kids up to, masters, or up to just a degree, or up to PhD. And then they work backwards. They calculate, okay, I have my child. I want them to attend a preschool. How much is an average preschool in Uganda? Maybe the preschool we want to take our child is 3 million per term. So you sit down and you calculate 3 million times how long is preschool. We are taking our child in preschool for 2 years and then they'll go to kindergarten. How much is kindergarten? You calculate. So you end up maybe coming up to a total of about like 150 million Uganda shillings. You need 150 million Uganda shillings to take your child up to senior 6. I'm just assuming. It's just a rough calculation. Could be higher, with this inflation of our country. So you sit down as a couple and you say, how are we going to attain this 150 million Uganda shillings? The wife earns maybe 2 million and the husband earns, let's say, 4 million. and you say, we are going to leave off the husband's salary and we shall use the wife's salary to buy a bond. So you use 2 million and you buy a 10-year bond, giving you an interest rate of about 14.2%. I'm just using a rough example. Why? Because the interest rates keep on changing. Also, according to the number of years or the amount of time the longer the bond, the higher the interest. So according to the interest rate. So be on the lookout for, Bank of Uganda adverts. So you buy that 10-year bond of 2 million Uganda shillings and it's earning you 14.2%. This is what you're guaranteed. You're guaranteed that this money is not being taken by Treasury One. That's the first guarantee. So you're not giving your money to someone in order to get money. No. You know you're going to go to the bank and open a CSD account. Remember, where Treasury One comes in is when you tell us that our goal is to educate our 2 children or our 1 child up to senior 6, and we want to make sure that by the time the child comes, school fees of up to senior 6 is there. Then Treasury One will sit down and break down for you how many bonds you need to have. That's why you need an investment advisory firm to advise you how many bonds do you need to buy. How much money do you need to put aside until it's time for coupon repayment, and they repay you according to an interest every after 6 months. You can choose to either use that interest to buy a new bond or keep it and wait for another auction and buy from the primary market, which is Bank of Uganda. When you buy another bond immediately, you're buying from what is called a secondary market. If you're new here and you don't know what a secondary market is or a primary market is, please go back to the previous 4 episodes. I was giving an explicit explanation on what a primary market is and a secondary market is. So yes, when you go to, by the time you give birth to your child, you're sure that this child has school fees. And guess what? It is very, very possible not to use the first amount you deposited. It will stay there for a long time and your child is just using the interest that the bond is accruing. It's possible if you plan better. And that's why you need to speak to an investment advisor as soon as yesterday. So, you fellow Ugandans, if you don't have the number of Treasury One, it's going to be on the screens below. Copy it and call and ask for an investment advisor and speak to them. Another scenario that I can use is someone working a 9 to 5. You're working like me in a 9 to 5 and your goal is maybe to retire by 40 or 50. Yeah, I was discussing with my workmates and they told me that by 40, my passion will have grown. Let's see how that happens. But if your goal is to maybe retire by 40, let's say, for example, 40, I have a few years to 40, like 13 years. So I will plan and say by 40, I should be able to, in my retirement, this is what I want my retirement to look like. I'd like to have a source of income that gives me monthly payment. I want to have a piece of land. I don't want to be renting. I want to have a house. I want to have an investment that is there that can be inherited by my children. Yeah. So I look at these goals and then calculate how much it will cost me to have these goals. And then I speak to an investment advisor and then he advises me on how to invest with the purpose of having a comfortable retirement. This is only for people who don't want that quick money. There are people who wake up in the morning and they want to check their account and they see that an interest has been deposited. So I'm telling you that during this process of investing or buying a bond, money does not exchange hands. There is not one time where Treasury One will ask you, give me your money and I invest it for you. No. Everything will happen when your money is on your account. Bank of Uganda, directly with Bank of Uganda. Directly. If you ever meet an investment advisory firm and they're asking you, give us this money, we invest it for you. Those might be scammers. but do your due diligence. So what you do is open a CSD account. By the way, why don't you refer to the previous episode? I put all the steps about opening a CSD account, then you deposit the money there, and then during an auction, Treasury One helps you to note the auction dates and then lets you know which bonds to buy, either a 3-year bond or a 1-year bond or a 5-year bond or a 10-year bond, according to how you have been advised by your investment advisor. And then you sit back and relax and wait to be paid every after it's time for coupon repayment, or even when the bond matures. Do you know how much peace you'll be having knowing that your money is making money for you and you're not even lifting a finger? Knowing that your future is actually secure. So you choose. You either become you're either a planned kid in this world or a planning kid. So even if you're a planned kid, you have to plan also for your children. I feel like the realization that actually we are the new adults, now we have to plan for the children that come after us. When it hits you early, the earlier, the better. You just run to Treasury One or any of your trusted investment firms. Talk to them. They'll help you. Just tell them, guys, help me. I want to be like this. I want to buy this car. For me, I personally wish I started investing when I was in the university. I wish I told them by 27, I want to be doing this. By 27, I want to be doing this. And then they help me. So run to Treasury One. The numbers are there. Free. By the way, Treasury One offers free investment advisory services to its clients. As long as you are a Treasury One client, those are free investment advisory. Imagine building wealth in a peaceful way without spending hours and hours reading computers. I see people who are doing Forex, they are watching charts. They don't sleep. They are watching some dots so that they don't lose their money. Or you're not scared that scammers are going to come for you. You're just there. You're making your money quietly there. It's quiet money, but it's also growing. Just like, like a matoke plantation. You might not harvest all the bunches at once, but before you know it, your matoke plantation has grown and it's feeding the whole village. That's actually the simplest way I can describe for you buying Treasury Bills and Bonds. Yeah. So the biggest myth we have here is you're there thinking, this thing sounds like it's for rich people, sounds like it's for corporate people. I'd like to assure you, that anyone, even a university student, from your pocket money, that very pocket money, the one that they've given you for the semester, you can save a little bit. Even if you save 1,000 per day, you reach 100,000, you use that 100,000 to buy a bond. You are way better than a 30-year-old who has 15 million resting on their account. I promised you, resting on their bank account, not accruing interest, just the bank cutting its charges. You are far much better. Yeah. So also, even if you're in the informal sector, boda men, you do mobile money. You're in the market selling your things. Small business owners, take advantage of this. I see small business owners. It's very easy for you to actually use your money, the profits, for enjoyment. Small business owners. Imagine if you set aside 100,000. By the way, we're not even asking for a lot of money. 100,000, you set aside and buy a bond. You are way better than a business that is relying on one person. So you know that the interest that you make from your business is going to outlive you. This 100,000 you've used to buy a bond, every time a coupon matures, even when you're long gone, the coupon will keep on maturing as long as, for the length of that bond. So imagine such peace, imagine such freedom. You're assured of your money, you're assured no one is going to scam you. It's just too much peace. So guys, I'm imploring you today, make the smart move of investing securely. I feel like even people who are in high risk businesses, very high risk businesses. Maybe you have lorries or those high risk businesses, cars. Car can go in an accident and you can also buy a bond. 100K, 1 million, 2 million, 3 million. You are sure that every after 6 months is some money, whether the car is there or not, whether you are alive or not, your family is sorted for the length of the bond. Even when you consult an investment advisor, it can even be for the rest of their lives. Imagine for the rest of their, you know that your money is going to outlive you. When you're long gone, your children are benefiting from this 100K or 1 million or 2 million, 10 million that you put aside. Your children are going to benefit from. Just imagine the comfort you'll be on, knowing that your children are planned kids. You are not a planned kid. You are a planning kid, but your children are planned kids. Me, I look forward to such a life. I don't know about you. Imagine if each of your child had a bond. My imagination is going wild. Before producing a child, you buy a bond for them. Every birthday, you buy a bond for your child. 1 year, my child is 1 year. Let me buy a bond for him. 2 years, another bond. Yeah? And you keep on investing. Imagine how much money your child will have by the time they are of legal age, 18 years old. Yeah? I'm just sharing with you my wild imaginations, but yeah, you get it. Those who get it, get it. If you know, you know. So my people, thank you for riding along with me this far in this video. However, I have just one piece of advice for you. You might be there saying, I'll start when I'm ready. I'll start when I'm ready. I don't feel ready. Yeah, I have little money. I'm just saying, start with whatever small you have. Even if just you've opened now, start as small as get a savings tin, put in 1K, 500 shillings, 1K, 2K, 3K. When it clocks 100K, go and buy a bond. You are much, much better than... Also, you parents, you buy your kids a lot of saving boxes. When they receive money from visitors, you break that box for your child. Instead of opening a bank account, buy for them a bond. See how your child is going to be richer than all her peers when they are old. Start from there. Just, use your child as an example and you see. I guarantee you, you're not going to regret this. You don't need to be a lion to build wealth. Sometimes, you can just be an ant. Slowly, you know how ants build their slowly, steady, bites, building, and before you know it, you've built an anthill. So don't give up. Even when you've made mistakes, don't worry. Come to Treasury One. We shall help you to rectify those mistakes. We can help you to rectify those mistakes you made in forex trading or in a money scheme that you're not sure of. It's also okay to feel unsure. So you can come and, ask us all the questions that you have. Again, I said, we shall not charge you for investment advisory services. Free of charge. But today is your opportunity to choose better and choose smart and secure investing. Till next time, bye-bye.